Good morning, everyone. Welcome to the metal markets. I'm your host, Market Stalker D. We're going to take an early look at the metals and maybe also the energies markets as well, since that is my specialty, apart from the metals. All right, so if you're new here, before we begin, first and foremost, read that risk disclaimer that Bruno posted so that we're all on the same page. And second of all, if you are not familiar with me, I've been trading for 20 years at this point. I've been with Topstep for over 10 years. I was their first female funded trader. That's how I got to meet everybody. And I specialize in commodities markets such as base metals, precious metals, and energies. So keep that in mind as I take you through some more unusual products that we can trade at Topstep. We're going to start with copper. I think I'm going to mainly focus on copper and natural gas because crude oil has left the sweet spot for me and is a little crazy. So even micros, with these ranges, it's absolutely crazy with the headline risk. I prefer to have markets that are between sort of 300 and 700 ticks of average daily range. Anything under that or over that, it's either too slow for me or too crazy. So there's that. Now, the thing with crude oil is that we've heard Trump say how they don't want crude oil above 100. Yesterday we had arguably one of the biggest days in crude oil ever. The only one that came close to the drop that we've seen was one of the days during COVID when we fell 2,000 ticks. Well, we overshot that because yesterday, I think we fell over 3,000. Yeah, so nearly 4,000 ticks drop yesterday. That was something, it's quite a sight. Yeah, so it was a bit nuts. There was 32% drop from Asia high. Probably not as much from the open, but they shot up and then it just started to fall. And I was bearish on it. I couldn't find a way to get in without getting absolutely chopped up. So instead of doing the chopping up bit, I decided to trade something that was kind of correlated. They're not usually correlated, but because this is a potential crisis for both natural gas and crude oil, they are seeing a better correlation during these times. So I think I'm going to stay with Natty because it's a lot more palatable. What do we have? We have copper that has a new gamma wall now up at 6 evens. It is currently still inside the Asia range after attempting to go above it, and now it's doing the classic fade back into the Asia range, doing it a little bit late. So I am maybe looking at more longs today. If crude oil continues to show weakness, copper has been showing strength, so they've been going the opposite direction. And maybe there's something to it. One area that's immediately jumping out to me is the Asia low that is matching up almost exactly with the previous day's COMEX value high. So that will be an area where I would like to fish for some buys. If they go even lower than that, that will be a very late value acceptance trade, and I would expect that to rotate at least to the ADR low, maybe even through the entirety of the value area, which is this purple bit here. And today we don't need the large volume profile, so that's one idea. Second idea is that there will be some hedging happening around the 6 evens level. Now, if you've been here for a hot minute, you know that 6 evens has been a pain point, a dealer hedging area for quite a long time. So that hasn't changed, and I don't really expect it to change much anyway. When I'm looking to the downside, I can see 570 as a potential area of interest, but before then we do have a smaller one, 575. in case we end up in not like some crazy day. Maybe we can even consider some levels higher up, so maybe inside the value area. Let's see what we've got there. Yeah, so maybe let's see, 583 has some interesting stuff going on. So yeah, let's say 583 maybe as a deep test of the value, and then yet another reversal. That will be the gamma flip area too. And because this is happening, this reversal is happening pretty late, outside of my normal statistical ranges, I would say that that would be a bit risky to short. Because the probabilities of a fade after the London Open and after Shanghai does the take profit move, that's one set of probabilities. But then you have the other side where that same level arrives later in the day. It's not the same setup because it's too late. So now instead of having nice movement, we're coming into the part of the day where it gets a little bit sketchy to run those kinds of trades. It should have happened really between my 6 a.m. and the London Open, and they didn't do that, so I am not interested in it. Let's have a look at silver. I think silver has come off its craziness. I mean, it's still nuts, but it's not as insane as it was. Silver is kind of following. We're about to arrive into a weaker call wall. The value area from yesterday is way outside of today's average range. So the value high is sitting down near 85 evens, just above it. And considering what kind of a day crude had, this was actually pretty muted session, but Asia was still very lively. They pushed it up, reversed it at around between usually 2 and 4 a.m. so that's perfectly normal. ADR low is sitting right below Asia low, so again that's another confluence that looks very interesting. And do we have anything else to the downside? So we have 86 as an area of interest. If it's a quieter day, maybe even 87.50 might come into play. So just below this 88 level, but I don't expect 88 to hold. I think there's going to be a little bit of drama going on in particularly this section here. Why? Because we have a number of options levels. So yeah. Let's see who's in chat. So EMS is in chat. I'm guessing you did something messy on Friday. Friday was an unwinding day post NFP, so I'm not surprised that some people were quite a bit surprised, but it's actually quite expected. And you know, as a general rule, you should be careful on Fridays. Fridays are, you know, take profit ahead of the weekend, and then you add a big release or some kind of news, and you either get zombie rallies when they do really start to move it, or you get those relentless down days that just keep selling and selling and selling. So it's a very tricky day. There's a reason why we call it the Capital Preservation Friday here. And if you're not preserving your capital and you see that the market is doing something that you didn't expect, just be careful of that cognitive dissonance. They can kick up something called the error-related negativity responses. Basically, your brain thinks you've done something wrong, and then it kicks off a fight or flight, and then you start doing stupid things. So that's usually the sign that you need to be a little bit more aware of that behavior. So there are signs technically as well. You know, if you get single prints, especially multiple single prints that are happening on the profile, probably not a good idea to try and fade that. You can maybe, just maybe, use a single print pullback to run more trades in the same direction. But if you allow yourself to just go completely on tilt, that is definitely something that needs to be tackled sooner rather than later. And if you know that it is the cognitive dissonance doing that to you, you can begin the work to try and undo those behaviors. It's difficult, very difficult, but not impossible at the same time. Right, so maybe longs in silver. If the Asia low does break and we see a breakout below it, a mean reversion down all the way to the value area is possible if we get that bigger day. But I don't know, maybe silver is done doing silly things and we can just settle into, you know, maybe 400 or 500 tick range. We're not there yet. It still has crazy days that are kicking up the average daily range to over 1,000 ticks. So until that settles, I will be a bit careful. Looking at what London did in regards to the initial balance. So let's have a look. Let me just do a little box here because I can't be bothered with lines. So here's the London Open. Initial bounce low, initial bounce high. We wicked ever so slightly above it, rotated through it. And now we're looking at a potential for a neutral day London session, which doesn't mean much once COMEX comes in, but for now, this is what we're seeing. This opens up a possibility for a return back towards this initial balance. We have VWAP here as well, so if the price pulls back above it, I wouldn't be surprised that they kind of just start chopping in this bigger range. So for now, not much to be seen. Ooh, hold on, natural gas is doing something. Let me switch over to crude as well. Alright, so Natty is going above its own end of day gamma level that is pretty strong. Let's see what that looks like on a 4-hour time frame. It looks like an accumulation and then potential reversal. One thing that is slightly worrying is that crude oil is reacting to that end of day gamma wall at 90. And where are we on crude in relation to the value area? So here's the value area from NYMEX yesterday. We're sitting below it. ADR high is not too far from value high. If it ever gets there, maybe a fade from there would be one idea for me. Again, don't follow, like these levels are just orientation points, and I have my own way of dealing with them. So it's not like this is not a signal service, and it's not any sort of advice of what you should do. I'm just telling you how I look at the markets and how I form my hypotheses so that you can do the same. You don't have to use options levels, gamma levels, and value area. You can, do a similar thing with anything else. You can do moving averages, you can do VWAP, you can do previous day's high, low. There's like 1,000 ways to do this. It's just I prefer some of the more data-driven levels. That's what I'm comfortable with. Plain and simple. But as a general rule, if you have something that is based on a statistical range, if it follows statistics, then some sort of a fade for me near the value low and ADR high would be appropriate. But if that happens early, like let's say that we start running higher now, we conquer the gamma wall and it starts going higher, what's going to happen? Well, it will be way too early, right? So maybe pre-market we have a small short, but then if they accept the value area, then this ADR is not going to be that relevant because we have a call wall up at 100. So you'll be looking at a value acceptance. So either or, right? But I don't like having hypotheses for either or, because I think that is the fastest way to mess up your P&L. So I always have different hypotheses for different levels, right? So I don't go, well, if it's a value acceptance, then I'm going to go up, but if it's a value reversal, then I'm going to go short. I only want to be short here. If it goes higher, so be it. I don't care. But for longs, I would really like to catch them maybe from ADR low, maybe from this large call wall at 85. I don't know, but I certainly don't want to try meddling with longs here, because the only time I will do get caveman trades, we discussed this yesterday on group coaching for a bit. And yeah, I will do, you know, breakouts, but only in the cases of gamma squeeze. So can we have a gamma squeeze? Well, maybe if we go above 100, but not here, because it's not breaking any new ground, right? And you know, the gamma flip is like literally right here at just sub 87, whatever this number is, 87.50. That is your gamma flip for today. And right now this is positive gamma, which means very likely mean reverting. Mean reverting. So it's going to be a bit of push-pull, tug of war. Now, natural gas might be more interesting. This is a 4-hour time frame. We are sitting inside NYMEX value. Still plenty of range left on the day. There was a GEX2 at 3.1. Let's go down to the intraday time of day. And then the next area of interest that I'm seeing is the one at 3 evens. But look at the composition of this value area. What do you see? What can you see? I can see a gap. If we smack into this gap and it starts to reverse, that's no longer a long. So I have to consider maybe some opportunistic shorts there, maybe. But if they go in there, maybe mess around with it a little bit, but never make a move away from it, there is a chance that we go all the way up to, first and foremost, ADR high, and then maybe 3.300, where a large call wall is located. Yesterday we had one at 320, and today is 330. So that's changed a little bit. They've gone up. And let's see what the options participants did. Whether I can see anything obvious. Just going back to the analysis. Alright, so oh, okay, here we go, we're here. Alright, so on Natty we've had the implied volatility expansion on this weakness. That means there was some sort of panic selling yesterday. So that means dealers are repricing the downside risk. And there's actually a put wall cluster between like 280 and 260. And if it falls all the way down there, that's a pretty dense support area. So that would be like an excellent longer term long. I might even consider running some long calls from there, but we're not there, so that's a little bit pointless to talk about. I am seeing still some downside protection being added. Some put buying around these levels at 3,100 as well. But the call buying is not too far behind either. It's actually a little bit higher. And we've had the call in interest at 4 evens that was removed. So I'm going to read that as some kind of profit taking on really far kind of out of the money calls. So yeah, 3,100 is definitely a pain point. So let's see what they can do. But the 4-hour time frame certainly looks decent, right? I mean, we have 3 hours before it ends, so anything can happen. And the inside value problem is not that surprising because it was such a massive day for Natty that it was expected. You know, whenever you have a very large day, that opens up a possibility for these large values. And what I do on those days is not really look at the value area edges as trade locations, but instead I look at the current day's TPO profile and how the current day's auction is doing. And obviously for that we have to wait for NYMEX. But we'll see what happens around these single prints from yesterday. That remains a bit of a danger zone. For sure. And with crude oil not being able to break 90 for now, I'm kind of doubting that this has any juice to the upside. All right, let's have a look at some more chat. Justin is asking, AD, why isn't there a live stream for micro Bitcoin? Probably because all of us here are a bit old school and none of us really trade micro Bitcoin all that much. I think Coach Hoop does. But he doesn't look at it like every single day, right? He'll be looking at it when something's up. And then we will turn our attention during the daytime show to micro Bitcoin. But you will find that most people were a little bit suspicious about the whole crypto space. And I always have like the doomsday version in my head. What if? Like, what if? Let's play, you know... Well, what are those people called? The people that are always calling the the end of the world or end of the civilization as we know it. They have a name for it. I was watching NCIS last night and they had one of those. What are they called? So yeah, if you imagine a world where, let's say, we run out of crude oil and it's Mad Max time. Would Bitcoin and any kind of cryptocurrency still exist? When we're like going through the world, through the wastelands, Fallout style, with like machete and fighting for pure survival. Internet won't exist, wouldn't exist, right? Nothing would exist. So what happens to the digital currencies in that case? And here we are, on the brink of running out of like natural gas. Even the UK over here, they are saying, I was reading up on it, that we only had enough for like 1 day's worth of the country's natural gas. And I think crude oil is in a similar predicament, right? If the prices persist above 100, we're in some deep trouble, man, like as a civilization, because everything runs on fossil fuels still. And, one conflict in the Middle East and everything goes tumbling down. So this is why most of us are not really that keen on cryptocurrencies, because they are purely digital. There's nothing tangible about them. You can't trade them by hand. Nobody's ever made an actual Bitcoin coin that you can hold and, cherish and keep under your mattress. So we're a little bit skeptical naturally. And yes, that could be just us being old. But I don't know, I'm always looking at it from the point of view what ifs. And if we don't have computers, if we don't have internet, if we don't have a way to mine Bitcoin, it's not a tangible commodity. Can we ever call that a real currency? Probably not. Doomsayers, that's it. Doomsayers. And preppers, yes. Fallout has preppers. Yeah, gold and silver in your pocket might be worth something, correct? Yeah, or bottle caps, Fallout style. I'm a huge fan of Fallout as a game and as a show. But yeah, I played every Fallout game and I loved it. So you go into like, if you're not a gamer, you go into like these weird settlements, and the currency is bottle caps. So yeah. Oh, Sandy is here. Hello, Sandy. Could I explain the gamma squeeze? Yeah, so it's when a gamma wall gets broken whilst also breaking some new ground, like let's say all-time highs, and then it just starts running away from it. It kind of looks like a zombie. We actually, is it a zombie rally? It's more violent than a zombie rally. So we had one last Thursday. If you were on my Market Stalker stream, I did one. Was this Friday? Let me just check my dates. So yeah, Thursday was the 5th. And I traded very late in the day, so that was the end of day comic settlement, because that's when I decided to run my own streams. And I've always been more of an end of day trader anyway, so that suits me for my comfort. So here we go. I think we had a gamma wall at 80. We ran through that, and then as the market started moving away from it, there was nothing. There was continuous push, and even though it doesn't look super scary, this was like continuous 5 minute of pushing. So I did a smaller trade on the account of a gamma squeeze. However, at every half an hour point, you can get this awful hedge. So that's what happened, right? So you got to the end of the day, and then suddenly they decided to hedge it. After trying to push it higher, they failed. And the end of the day, shenanigans brought it back down for the final hour of the market. That's always tricky for gamma squeezes, because it looks like it's going really well, and then half an hour bar closes are where the danger lies. So you have to be pretty quick with taking your profits, and even though gamma squeeze tends to carry on in equities, commodities are not quite that simple, right? Commodities are fickle beasts. They can turn on you in the blink of an eye for a million ticks, and you have to be pretty decent at figuring out the day's sort of the day's flavor, so to speak, and then trying to figure out if it is a swing potential or if it is a gamma squeeze, to just kind of grab whatever you can and run for the hills. If it was an equity index and you see a gamma squeeze going above, relevant area, breaking like new ground, that tends to be safer to hold because of the nature of what equities are. They are designed to go up. Now we have a bit of a semi-disaster on our hands, so obviously the risk off has been quite terrible. Now, is this also a gamma squeeze? Absolutely, but it's a multi-day gamma squeeze, right? And then obviously we had the weekend open. That was also a form of a gamma squeeze, so it does carry on for days until it doesn't. Until they just decide, all right, that's enough. Let's go back down. CryptoFish says, not currency, Bitcoin is a commodity. I'm also going to ask you, can you hold it? Because you have raw commodities, you have soft commodities. Which commodity does Bitcoin fall into? Digital? Again, I'm super skeptical about those claims. Yes, you mine Bitcoin, but you mine it with computers and internet. And if computers and internet are not there, how are you going to mine it? I'm going to die on that hill. Sorry. It is what it is. Gunny D hits again. Alright, so got frogs in my throat today. let's have a look. Cryptofish says also, I trade Bitcoin, but I do it on a different exchange. It's open 24 hours. Otherwise, the chop is ridiculous. Yeah, that too. So the futures, Bitcoin and Ethereum were a little bit more appealing to me. But again, whenever I look at price action of it, it sort of almost reminds me of bonds, right? So we can have a look at MBT, if you will. If you don't have headline risk, let's go back. Let's go back before this whole thing started kicking off. What I find is that it sort of does things out of order. And I think it's because it doesn't, like nowadays they probably do have some market makers working to generate liquidity. But it goes into these extensive times where for 2 hours, 3 hours, 4 hours, it does nothing. Then it kind of moves in one go. Then it still does nothing, and then it kind of pushes again, and then still does nothing. This is on the opposite side of the extreme volatility for me. This is like a market that is unpredictable. It doesn't have time-based events. It spends enormous amount of time. Like this is a 30-minute time frame. 1, 2, 3, 4, 5, 6, 7 hours of it doing nothing after dropping once. Even as somebody who's a swing trader, but intraday, this sort of price action irks me. And I don't know, any time I try to trade it, unless there's an isolated event that just kind of kicks it off into something, you can't even catch a range-bound trades because the ranges, when they are there, they're so tight. And then when the move happens, it just happens. It kind of reminds me of crude, how it was like for 2.5 years, right? Just one big move and then nothing. One big move and then nothing. One big move. I don't trade like that. I need ebb and flow. I need the market to have opportunities on both sides throughout the entire 24 hours. And for those who are like, well, Bitcoin trades 7 days a week. I don't care. I like my weekends. And just because something open, even if futures start to trade 7 hours, 7 days, all week long, that is not going to change the amount of hours that I spend at the desk. I'm still only going to do the streams, and then I'm going to do the brunt of my trading between sort of 4 p.m. my time and 8 p.m. Sometimes even 6:30, 7:30. So 2, 3, 3.5 hours a day. It's enough for me, right? I'm not someone who spends 12 hours glued to the charts. That's not how I trade, and I think that would probably kill me at this point. So I need structure. Bitcoin for me does not provide that. And unless, it's in heavy focus, I just find that it's not really doing what I want it to do. Alright, so natural gas. Let's see if we can do something with it. What's the range here? Okay, the range is just enough to kind of run maybe a 5 lot here on a 50 tick stop. So let's try MNG, and I'm gonna recycle the chart on copper to show us natural gas. Alright, so these are my reminders of when I should be scaling in. So again, scaling in, 12 will be the first one. I've got 20. Although it is a little bit more volatile than normal, so I'm going to skip 20 and go to 28. So if it starts to move, I want to scale it in. Now, as you can see, there's danger. Yeah, okay, so it's not really going to survive. Is it going to survive? See? Is that news? I don't know. We'll see. But I might just get smacked in the face for one core position. I've got a bracket on the chart. I do not want that either. Okay, that's a bit faster than I expected. Alright, so we're just going to keep it at 2 scale-ins, just in case it starts to rise. And then I'm going to be adding, if it starts working, then I'm going to add the buy stops and sell stop limits and all that. Sell stops and buy limits. What is going on with my throat? Christ. Yeah, so the danger here is that crude oil being correlated with it this week, that it doesn't tackle this gamma wall here, and then we end up all the way down. But that's alright, because we're only in a core position. And if it does go back up there, this can be looked at as a test of the end of day and VWAP. So we'll see. We've got a chance. We've got a chance, but it's not ideal. When it goes against you like this, that's a little bit scary. But again, I have a defined risk, and you can't allow that to throw you off and go, oh my god, what's going on? You just go, okay. Test of end of day, X2 until that breaks. There's nothing for me to do, and my stop is just underneath that area. So if it really breaks, so be it. But yeah. So notice that the stop is below the round number, right? So it's not at 3.1. I'm not nitpicking with 30 tick stops. This is a very generous 50 tick stop. And the whole end of day X2 really needs to break in order for my position to be knocked out. Is it ideal that it immediately got me down into a drawdown? Absolutely not, but it's also not something to freak out about, because it's a defined risk. No one cares. So, yeah. Yeah, I agree, DAX. I love DAX. Some people saying the DAX is getting a bit more difficult. Doomlord has joined us. Good morning, good morning. Younger trader's mistake, realizing you can make even more sharper potentially. Not realize you can make even more sharper unless the key to my years of better trading was being exhausted, so I thought less. Yeah. Alright, Mario says, good morning, Dee. I usually trade the DAX, but it became difficult because the inverse correlation with oil is too obvious and difficult to deal with. My question is there a correlation between gold and oil? Yes, unfortunately, headline risk affects everything, Mario. Sorry. It's one of those weird headline risk things where risk off sentiment. I don't know whether you're a market stalker or not, but I talk about risk off and risk on. And during those times, gold will be inversely correlated with equities, all equities. But then crude oil will also be inversely correlated with equities. And then sometimes gold will be moving on its own, in its own story, because the headline risk has faded for a bit, for like a hot minute. And then you just need to, like what I've learned to do over the years, which is not easy, and this is purely just years of watching things, is to look at things in sectors. So if I look at my chart, I have like 4 assets from the single asset class per page, per sort of tab. And then I have another one for commodities, for energies market specifically, and another one for metals. So that kind of provides me a snapshot. But was I able to do that in the first 5-6 years of my trading? Absolutely not. I didn't know what I was looking at because I didn't have a systematic way of looking at the levels and which one is stronger, which one is weaker. And it took years before I actually got comfortable and not overloaded by looking at multiple sectors all at once and knowing what's going on. Absolute years. And I would say at about year 6 or 7, I started going, oh yeah, okay, so I'm starting to see something, right? And I'm not overwhelmed. But I would say that it probably took another 5 years before I was able to just have a glance at it and go, right, risk off, risk on. It's not an easy thing because it involves multiple charts, multiple analysis. One thing you can do is to start writing things down as you are as you're noticing these correlations, and then maybe have, some reference levels, reference like VWAP, ATR maybe, and maybe have what would be the best thing. So for me, profile provides me with a snapshot of who's where. So for example, crude oil, a little bit bearish, natural gas, a little bit neutral. Why? Because we're inside its value. Gold is, I think, bullish because we're above value. But yeah, risk off. It is difficult, very difficult. So the correlation between gold, oil, equities, silver, natural gas, that is a headline risk thing only. Now, right now we're in yet again for the up 10th time. First was tariffs, there was COVID. It's like, can we get a year without black swan events, please? Or like even a few months, just a few months. Like, can we actually trade normally without a black swan event? That would be nice. It would be nice. I do miss the pre-COVID times when we didn't have something kicking off every few months or so. But yeah, so this is an extraordinary situation where you have a potential for a huge deficit of crude oil, which runs the world, right? Everything runs on fossil fuels still, unfortunately. So with that in mind, there will be cross correlations everywhere. Is it a normal situation? Absolutely not. It is a bit of a black swanish thing where nobody could predict. I mean, there's always stuff kicking off in the Middle East, but this is unprecedented, where we have, USA, NATO, Germany, Britain, like all working in sync to try and deal with it. And Iran, unfortunately, holds a lot of the world's oil. So that is obviously a pretty tricky situation. And everybody's worried. That's why crude oil hit like almost 120 yesterday. So that is going to have a knock-on effect across the board. And that's what we call either risk-off, usually. If crude oil is going up, equities are going down. Gold is typically going up as well. And then you can have risk-on, where they're going back, flocking back into safe sort of equities, buying equities. Because what happens during risk-off? They dump the safe stuff and go into risk products. That's why it's called risk off, right? And risk on is when they're trading more sane things like equities and stuff. So they're putting more money back into equities, into tech, into all of this stuff. And, it doesn't happen that often. I think this is the first time that I've seen it correlating back like the old way, how it used to correlate during risk off. For a long time we had gold and equities going the same way. And we were like, what sort of twilight zone? Like entirety of COVID. What happened? Positive correlation between gold and equities. And all of us have been trading for a hot minute. We're like, that's going to mess up the traditional portfolio theory that says you need to diversify. So diversification would mean... the old portfolio theory is that gold is a safe haven, therefore they will flock in it. But then what happens when equities are also going up? So what sort of a weird parallel universe did I step into? But now we're seeing more of that traditional, equities up, gold down on a lot of the days. And then now we have equities down, crude oil up, gold up. That's how it should be, right? During risk events. All right, so we survived, guys. We survived. Yay. For now. Now it's down to crude oil whether it wants to revisit this 90 level. But so far, Natty has held the GAX 2 with some drama. We just need a little bit more movement away from this level. But yeah, that was one of the moments. Not done yet because it hasn't actually moved where I wanted to move. But it was a moment that I think for a lot of people would be pretty tricky, and you would start trying to close out the position, maybe go short, maybe go long. But I don't do that. I just go, yeah, if it breaks the end of day X2, it's fine. Next. So you try to not let the unexpected events get your brain into the ERN response, error-related negativity response, which your brain reads as cognitive dissonance and then starts freaking out because it thinks you made a mistake. There are no mistakes. There are just positions. If you get stopped out, it's not a mistake of any kind. It's just that the market didn't do what you wanted it to do at that time. That's all it is. So you need to develop that as a superpower. You need to call yourself, like a Marvel character that has the superpower of remaining composure when unexpected things happen. Should we come up with a name for the superhero that you're creating inside yourself? Why am gold and silver, I think, just pumped because news Trump is possible. I could talk to Iran. Yeah, you see? There it is. Headline risk. That did look a little bit newsy, for sure. I will admit that was like, everything was calm and nice and then whoosh. And I'm like, what? Yeah, so he says that it's possible that he might talk to Iran. Iran has not been very open to it, though. They were like, no, we're seeing this as an attack on our oil reserves. And we do not want to. So it's like, are they actually going to sit down and talk? If they do, that would be an amazing achievement. Everybody wants peace. Everybody wants peace. Nobody wants this blood and hell to keep happening anywhere. And I know that more than anyone because I grew up in former Yugoslavia. So that was fun. So yeah, we got bombed by NATO. Wait. That was an experience. So yeah, anything that happens trading related because of that experience of mine, it's just nothing. It's like, nah, it's just a bit of money. As I like to say, it's just, there's no death threat in the markets, even though your brain looks at it the same way, because they think, your lizard brain thinks that there's a lion chasing you down, but there's nothing more than just some numbers on the screen, hitting you in the fields. Heavy in here, and you have to learn how to deal with that. If you keep getting irked after every lost trade, you can't live like that. It's a miserable way to live as a trader. So as long as the risk is controlled, any loss should just be okay, thank you, next, okay, reset. And the reason why we say, oh, that didn't work, reset. It's not a reset of a combine, it's a reset of your mind, right? So it doesn't work. Okay, put it outside of your brain. Be like Drew Barrymore from 51st States, as if you have some sort of brain injury that doesn't allow you to retain information past one trade. And let's keep going. Work on that skill. That skill is not going to just go away, right? Or appear out of nowhere. You deliberately have to control the self-awareness of the cognitive dissonance that results after a losing trade or after the markets put a wrench in the works. You have to go, here we go again. So it does something, and you feel something, and whenever you feel something, that's a bad sign. It means that your primal brain is activating. So if you don't feel anything, that's a good step. But you can't be oversized to your eyeballs, because that is going to play a part in your ability to hold the trade long enough for it to do something. And if it still loses, you still need to soothe the inner child in the lizard brain by saying, okay, it's just one trade. The risk was controlled. I did well. So flip that narrative from, oh my God, you lost. Oh my God. Flip that to, all right, let's now breathe through this. It's okay. This is only one trade. Talk to yourself. I talk to myself all the time. Like even now, I'm arguably talking to myself. But there's all of you here, so it's not weird, right? At least I don't think so. But when you are trying to level up that part of your trading, you have to put it out of yourself. You can't just keep it in your mind. And I actually like writing stuff down. So as you're seeing things, take a pen and a piece of paper and start writing things down. Okay, what did the market do? Ask yourself questions. What did the market do? Why did that trade lose? What was I expecting to see? What did it do? So for example, for me, it would be like, okay, expecting a further move away from the end of day GEX2 level, but I do need to see crude oil go over 90. On the first try, it didn't happen, but 310 held on that first try. It was a bit uncomfortable, but there was VWAP there and it bounced back up, so there's nothing else for me to do. Stop loss survived. Breathe. Yeah? So that provides you with context. You externalize your emotions rather than just keeping them inside so that nobody can see them. That's not a good thing. And you just deal with the situation, right? You don't turn into a 3-year-old throwing your toys out of a pram because one trade didn't work out. But it was supposed to work. Yeah, it's probabilities. And there is such a thing as unevenly distributed probabilities. So you look at 10 trades, and if something has a 70% of time working out, let's say, however, you catch the point where 3 trades don't work out, and then the next 3 don't work out. And now you're thinking, well, this is not a 70%, is it? But what's really going on? You're working with a tiny sample size. You're working with 10 days. That can also have unevenly distributed probabilities inside them. However, take 500 trades, take 1,000 trades, that's where the true probabilities lie. This is why I'm, whenever people are coming to me in the VIP and going, I passed my combine, how long did you spend in it? 2 days. Now, the VIPs that usually that start the VIP program, they very quickly understand that when they make that, I'm in the XFA and I ask, how many days did you spend? Most of them do 2 days, and then the emoji of like don't kill me. Because it's not good. You're not developing any skills to survive the XFA. And then my next question is like, well, how long do you survive at XFAs? And then they go 2 days. So I'm like, well, okay, great. So well done, but now let's not do what you did before, right? Oh no, I'll slow down. And what happens? Well, maybe they stick to it for about 5 days and then they just don't slow down. They get annoyed. They're not used to the smaller size. They want to see their thousands on the screen, and then they lose the plot and start doing stupid things again. So this is why we say, try to slow it down. Try to slow it down, and work on that emotional side of yourself. It's not, it's not impossible. Is that my oil voice? Yes, that's my oil voice. Crypto Trade says, D, it's all because you started trading MCL. Thank you, D, I love it. Honestly, I have the completely different perception there. Because I think that whenever I start trading, it dies a death in the last 2 years or so. Like every time I touch something, it just stops moving. And I'm like, is it seasonality or is it just me? Like, what is happening? I traded crude oil for all of those times. We start Topstep TV, crude oil dies a death. I find copper and I managed to turn things around. Everything's great. And then it dies a death. And then I was like, okay, let me try doing silver. Silver is amazing. It's breaking out. It's a winner. And then for a while, silver goes completely nuts. So I don't know, maybe my penchant to remove volatility with everything that I touch, maybe that's changed now. And now it's going the other way. Whatever I touch, it goes insane. Again, is it a quantum realities thing? I don't know. Have I died and shifted into it? Did you hear that? Did you hear that theory about, what's it called? Quantum immortality. That apparently we never die, we just kind of branch off into another parallel universe. I don't know how that works for old people though. It's like, doesn't your body have like a finite state? And I don't know whether I want to live forever, to be honest. Would you want to live forever? I think I would want to live longer than 80 some years, but or 100, the way we're going with medicine. But would I really want to live forever? Do I want to be a vampire for real? I don't know. Trading nickels, that's been the case, yeah, for the last 2 years. Literally, whatever I touched, instead of the Midas touch, it was Dee's touch, where she touches something and it just stops moving. So I'm like, okay, Dee killed all the volatility again. But it changed with silver. You know, I started looking at it, and then it goes nuts. And then I started looking at crude oil, going, is it back? Is it back? And then that goes nuts. So I don't know. I would just like some normality. That's all I'm after. Just normal 300 to 500 tick range where there's no headline risk. Can somebody get me a genie with 3 wishes, please? I'm joking. We can grapple with anything. If it's moving, that's better than not moving. I'll say that. We can deal with the extremes. And to be honest, my second live account was all done on the tariff volatility, and I absolutely loved that. But that was copper. Copper was very smooth. Like it was very directional, and when it would go, it would just like run for 300, 400, 500, 600 ticks. So that was amazing. But we'll see. Natural gas and copper are not, like, they're volatile, but in a sort of different way, right? So natural gas can gap a lot, but also because the prices are so low, the gaps look like they're much bigger because it's a scalable thing, right? So for example, it's not the same when you have something sitting at $3 and then something else like silver sitting up at, you know, or gold sitting up at like $1 million, you know, 5,200. So when you measure the percentages from one side to the other, you know, the move of, you know, $100 in gold or $300 in gold, that represents, you know, not as much. But if you ever had any sort of move of $50 in natural gas, that would bring it back up to like what, $53, and that would represent a crazy amount of movement. So I mean, we probably wouldn't even be able to, or maybe we can. So let's see what percent that would equal to 1,140% of movement, right? And a bazillion ticks. So obviously it's not the same product. So when we say natural gas is gapping down 15%, that is not going to be the same impact as gold is gapping up or down 15%, right? Slightly different, and purely because of the scale, right, of where we are. And the higher it goes, the percentages have a little less effect. So the higher the price, the less effect the percentages have. So does that make sense? I don't know. But basically, nat gas is at $3, gold is at 5,200. It's not going to be the same scale, right? Right, I'm going to go back to crude oil here just to track what it's doing. I mean, we're still holding. We just need something to push it along. How does Hope put it? Let's everybody get out and push. Get those nat gas canisters down the road. Did Topstep stop crude oil? No, not yet. They might. Or they might limit. I don't think that they will stop anything. Because, you know, they're not going to stop all trading, I don't think. But they might limit the number of contracts, like they did so for the metals. I don't know what's going to be left to trade if every company decides to limit everything. You know, we already have a couple of companies that have limited metals. So now what? Are we going to start limiting everything? Asking for a friend. So, you know, crude oil, yes, it's volatile, but metals, yes, they're volatile. But until the exchanges deem the volatility is like, right, we're stopping trading on this. And the only time that's really happened is during limit up or limit down events, and then also crude oil going negative. So I think limiting the positions should be the right call, absolutely. But completely restricting when the brokers are not, and CME is also saying, yeah, it's okay to trade, just be careful. Now, if they stop it, if the exchange stops it, then obviously we have to as well, but yeah. All right. Dan says, I don't think anything is stop oil until we use it all up. Well, wasn't there a study that said we had only about maximum, like what, 50, maybe 50 years left of crude oil for the entire world? Wasn't that it? I think that was like, or was it even worse? Was it like 30 to 50 years? Which would be a pretty grim picture, you know? So we either find alternative power, but none is as efficient as fossil fuels, unfortunately. Or somehow Elon comes to save us and we find crude oil somewhere else. I don't know. I'm hopeful. Definitely hopeful. But yeah, for now, we still run on fossil fuels. Alright, so this is, it's trying. So crude oil is trying to reject VWAP. We would really need to see crude oil moving above 90 in order for that to push Natty into a nice move higher, at least through these single prints. You know, that would be... Not looking for much. Not looking for much. But yeah, 320, you know, should be on the cards. I know my my limit is up at 8-year high. That might take a little bit longer, but you know, if crude oil starts to run, to retest some of the levels from yesterday, because we have value low in and around this section, so maybe we retest that, then we reverse, and then just drag Natty along with it. That'd be nice. Right, that's been debunked, Sleepy Mocha says. Okay, yeah. Some of the old wells that were empty refilled. Oh, interesting. Yeah. That is interesting. Does that mean that Earth gives birth to crude oil? Like, ooh, you've run out. Let me cook up cook up more. The Earth cooking up crude oil. That's an image, isn't it? Dan says, yeah, about 50 years ago, kept pushing out the peak oil date. Yeah, I remember that. Hopefully it lasts until we master fusion power. Yeah. Yeah. I mean, look, well, the technology is still doing very well. Don't know, maybe AI is going to help us find new fuels, or how to optimize the ones that we've got now. So the game that I'm playing in my spare time is called Satisfactory, and Factory is the big part of that. Sorry, my dogs are going nuts. I'm going to mute myself for 3 seconds. Alright, they've gone to the other part of the house, so hopefully, no, be quiet, Manny. You don't need to be in every single thing. Alright, yeah, so the game that I'm playing right now, it's called Satisfactory, and you make factories. So you start off small, there's a crafting bench, and then at the phases that you go through, you literally have to start automating things, and you come up to creating these enormously complex factories and, you know, components for the major part. And then you have to automate the power. So you have a coal power, you have hydropower, so you find like geysers and stuff, and then plunk things on them and generate more power. And then as your cities grow, your power consumption grows as well. So every so often, if you go over the power consumption, the fuse trips, so your whole city goes down. And now I've got to a point where I've been playing it for quite a few months now, so I have it on like different parts of the map, but I have one grid that is connecting pretty distant areas of the map. That's what I like to do in my spare time. I used to play like just fighting games, but now for some reason my brain has gone into, hey, let's make some horribly complex engineering projects even when we're playing. So I don't know what that's all about. Alright, Crude Oil, come on. We need you to move whilst we're on the stream. Yeah, Trading Nickel says, Earth giving birth to crude oil. That's quotable. It's smooth. Thank you. Thank you. Glad you like it. Pre-COVID trading ES with Topstep trading minis was too large of a risk on every trade, but we became familiar trading minis. With micros, there's a learning curve. I agree. I'm going through that learning curve as well, man. So this thing that I'm doing with adding, I found myself recently avoiding to scale into the third and fourth. So I'm like, what's that all about, right? Because I obviously now have some data. It's like, all right, so I've lived through like a month and a half of this, and it's still uncomfortable, but I can see how it's better. So I'm trying to stay with that execution style, but I think it's just the 20 years of me trading one way. It's very hard for me to change that. Changing old habits, I find, is more difficult than just getting somebody who doesn't really have that many new habits, and therefore you just set that as a routine. They never question it. But those of us who have like done things one way, it's very, it's difficult. So for me, I'm now forcing myself, like even now, look at what I've done. So I've caught myself doing the same. So I'm supposed to be scaling in at least 3 times. What did I do? I plunked 2 and not the third one. So what's the point? What is the point, D, if you're not going to follow it? So the next one should be at 36. And I avoided adding 1 purely because of the volatility. But if we are already up here, that should be okay. So I am going to try and force myself to keep doing what I know is mathematically sound. Oh no, it's supposed to be 36. Hold on. Because if it starts moving, yeah, I want to be in on the full thing, not like partial. There we go. Okay. I'm supposed to be adding a 4th as well, but I don't want to. So you can see my brain is like fighting. It's like, don't do it. No, don't do it, D, don't do it. It's supposed to be 5 up to 9. I've got to make myself. This is the uncomfortable part. I've got to make myself. So if it doesn't work, it doesn't work. But I decided, it's like, nah, I'm not going to add 20 because I don't like it. But if it starts moving, the whole point is to be in with a fuller position that you are on this one. And my brain, as I'm talking and being distracted, I decided that I'm just going to add 2. It's like, that's not following your plan, D. So follow your plan. 5 core position on nat gas, up to 9 for a full thing. That's how we did the risk model. That's what you're supposed to be doing. Not veering off and then just picking and choosing 2 because I'm uncomfortable with what's going to happen to the average. So that's, all right. How long do we have? We've got a few more minutes here before we have to make room for the main for the main broadcast to happen. Is it like SimCity? No, it's nothing like SimCity. You are actually creating conveyor belts, lifts. You are, you can create roads as well with like foundations. I've created them all up in the air, so I have like cities building up. But SimCity is relatively simplistic to it because you just have buildings, right? You have buildings. Oh, this is a factory, this is a hospital, or this is a police station, and then you try. There's none of that here. So there's no other people. It's you on your own on a strange planet. That's it. One pioneer just there, like the Martian, right? But you're supposed to start from nothing, and then you find resources, and then initially you mine them manually, but then eventually it just doesn't, you can't do like the amounts that the game asks you to do. You can't just sit there and chip away on your little crafting bench. You have to build factories, and it forces you into it. And it's beautiful, it's challenging. You have drones. I've unlocked drones, so now you can transport some resources for drones, but then the drones need to be fueled, so I have one area where I'm creating crude oil. Can't believe we're talking about this. Where I'm like creating crude oil and processing it in the refineries, and then shipping what's now called the turbo fuel in a packaged form, and then shipping it to where it needs to be via drones. And it is madness. It's complete madness. You can build trains and stuff, but I find that trains are a bit clunky, so I prefer drones and trucks. In case you just dropped into the stream and you have no idea what's going on, I'm talking about the video game that I've been playing recently. Alright, so crude oil doesn't want to go up. I'm going to take my losses here because this should have moved already. It's not moving. This is now testing the gamma exposure level 2 from the end of day. It might work, but crude oil is not playing ball. I wanted it above 90. It's not doing it yet. So for now, we're just gonna take a partial loss and then wait for a better time of the day to arrive. Satisfactory, it's called, and I play it on PS5, but you can get it on the PC. I'm just gonna let the Cavalier out because he's scratching and Crikey's barking. It's a great dynamic. Alright, so yeah, I have my Deaf Cavalier, and sometimes, because he's on diuretics and stuff, he needs to go out pretty frequently. But then Crikey, the little Crichton, sable red boy, he doesn't like it when his dad scratches on the door from the other side. So then he barks at him. So and Leonard can't hear him, because he's deaf, so he's like, yeah, whatever, man. So he keeps scratching and then crying. So it's a dynamic. Alright. Let's go back to see what Copper is doing for a second. But yeah, I think Copper and Natty are going to be my two babies today. And then we'll see if we can catch something after 9 a.m. Central. Oh, but I also have to somehow fit in a dog walk. So maybe closer to the London close, I may have a better setup on Natty that's actually going to move. And by then we're going to have quite a bit of more data. But right now, even though the 4-hour chart still looks a bit like an accumulation, this end of day GEX2 should have brought a little bit of a better move for this time of day, which makes me think that today is going to be not as crazy, because crude oil for now is also very sideways. But look how similar they look, right? Very similar. This is not a correlation you see very often. So whatever crude oil does, natural gas is probably going to follow, but not to the same insane million ticks a day and jumpy price action, yo-yo price action that crude oil has been exhibiting over the last few days. So I am still going to look for some maybe short time longs, and then as soon as we hit a little bit higher, that's going to be the time to have a look at more shorts if the market allows me. But where we are right now, given the fact that the GEX2 on Natty and the Gamma Wall at 90 on crude has not given way, this is a bit of a 50-50 now. So we need to wait for the resolution of this accumulation or redistribution, whatever it ends up being, and then we can see what's happening later on in the day. As always, my prime times of day are in and around the London close. Failing that, it's going to be about an hour before NYMEX close for energies and half an hour before COMEX settlement. But then even after COMEX settlement, the metals continue to move. Crude oil and Natty are not quite like that, so they rarely move past settlement. But maybe this whole risk-off and news-related environment could mean that we have more bounciness even post-settlement. It certainly happened last night. But it depends whether somebody's talking, whether we get news. Still very news-driven, so keep your financial juice open. Keep your eyes peeled, and if something starts doing yo-yo movements, all of a sudden assume it's headline risk and don't try to trade that, but instead try and figure out what they're saying. Then maybe trade after things settle a little bit better, because that's it's not a great thing to try and jump in when algos pick up a word and they react in like a nanosecond, and then you as a human, you're trying to fight that. Don't do that. It's not very healthy. So whenever you see a newsy candle, just go, what is that? Don't default to, oh, you have to get in. No, just default to what's going on. Ask yourself a question, find out what the reason is behind that, and then go, okay, let it settle. We don't need to be in that. Oh, but it moved 1,000 ticks. Doesn't matter. You could have lost 1,000 ticks just as well. So breathe through it and just go, right. Do I have any levels? What is the profile doing? Do we have single prints left behind? What is order flow doing? Do we have delta rising, falling? Do we have maybe them trying to go down, but delta is still stuck? So therefore, the orders are being absorbed, and then it goes back the other way. There are ways for you to develop your process so that you don't get stuck in FOMO. And usually the answer to FOMO is more data. At least it was for me, for sure. It's probably not the same for everyone, but I just find that if you are a trader with some more knowledge about what happens at this time of day, why is that a statistical probability, how does it relate, like one level reacting one way for London close is not going to be the same as that same level reacting or not reacting at another time of day. Does that make sense? So let's say we have ADR high and we reach it at the open of NYMEX. I don't care to fade that, okay? But if we hang at ADR high and then we get to the London close, that's when I become interested in it. So the same level at different times of the day has different probabilities. And that's something that I'm trying to hammer into people's heads, something that's helped me. Oh, ADR high. Yeah, wait. Just wait. Wait, D. And I used to say that to myself. It's like, oh, ADR high is here. And then I would remember, I'm like, time. What is the time? So then you have like almost like a flow chart in your head. It's like, yes, level is there, time isn't. Wait. It's a binary options decision. Either trade or no trade, because there's a condition of 1, 2, 3. Are all the conditions there? no action. Conditions 1, 2, but the third one's not there, that's still a no. Only when all 3 conditions arrive, you're like, all right, time to trade. And then there's no dilemma. You just enter because it becomes like almost like autopilot behavior. Granted, at this time of day, probabilities are a little bit 50-50. On copper, there is a mean reversion probability that only has 53% chance of working out. So the probabilities are much, much higher the later you get in the day on some of these commodities. But the mean reversion has more juice in it, so it goes further than the continuation trade on most days. Again, you will have still, the other side where the outlier days appear and then it goes for a million ticks and you're like, but yeah, it's one day. but just one day. One day does not make a sample size. 1,000, even 100, then you've got something. All right, I'm going to end it here. And seeing how I don't have any setups, so not much point. We talked through the levels. You know where the gamma walls are. These are going to stay for the rest of the day. They're not going anywhere. They might shift a little bit, but on commodities, these levels tend to stay, sometimes for like 2 weeks at a time. Very little change. Even on crude oil, we still have 100, we still have 90, we still have 85. Didn't do it past, 50 strikes because didn't have time, to be honest, so maybe I'll redo it if we fall significantly away from the levels that we've had during this session. But for now, we have some anchor points, we have our average ranges, still plenty of range on the day. That wasn't the case yesterday, and let's see what the day brings and how they want to play the markets today in light of the headline risk. It's still a huge issue for everybody. Caution as always. This was the Metal Markets on Topstep TV. I'm Market Stalker D, and I will see you again tomorrow for another episode. Have a great day and take care.